Hello everyone. In this video, we are going to cover ratios and fractions in financial accounting. We will explore the overlap between maths and accounting. Let's kick off with a simple example. For the financial year ended 30th June 2020, ABC Limited reported a profit after tax of 315,000 rands. Assuming a company tax rate of 30%, calculate the profit before tax. As this is a very easy example, I encourage you to perhaps pause the video and try this out on your own. So how does one do this? If we have to insert the data in a table, you would notice that profit after tax of 315,000 is provided, and usually you would always calculate the profit before tax, subtract the tax, and then arrive at profit after tax. But in this case, it's fairly simple, and the way how to jump from your profit after tax to your profit before tax is to be able to identify the numbers that would assist you when calculating the different parts involved. So if you have to think of the fact of tax being a rate or a part at 30 parts, then profit before tax would have 100 parts and profit after tax would have 70 parts. So thus the solution is fairly easy. You simply take 315,000 and you divide it by 70% or 70 parts. One can then also test this out using the proof by taking 450,000, multiplying it by 30%, you would arrive at 135,000. You subtract 135 from 450 and then you get 315,000 rands. Let's move on to a slightly more challenging question. ABC Limited sold a car to the value of 67,275 rands. The transaction price includes a 30% profit on cost, as well as VAT of 15%. At this stage, you may pause the video if you would like to try this out. The question is, calculate the cost, profit, and VAT components of the transaction. To do this question, it's very important to firstly understand what the different components are. Cost is a component, profit is a component, and if you add your cost and profit, you will arrive at your selling price exclusive of VAT. After adding your VAT component, you would then get your selling price inclusive of VAT. After identifying all of your components, you would then need to assign parts to each of these components. So, assuming that you may assign 100 parts to your cost, for your profit, it's given profit would be 30 parts. Your selling price exclusive of VAT would be 100 plus 30 to give you 130 parts. Your VAT component would then be 130 multiplied by your VAT percentage of 15% to give you 19.5 parts. And if you add 130 to 19.5, you would end up with 149.5 parts for your selling price inclusive of VAT. Once you have the parts, you can then very easily calculate the cost, profit, and VAT component. In terms of what is given to you, your selling price of the car is provided to you, so thus everything else is unknown. In order to calculate your cost, the trick in terms of ratios and proportions is to multiply the figures across. So 100 is across 67,275, and you divide it by the opposite part number, which is opposite to your unknown. So in this case over here, your cost would be 67,275 multiplied by 100 across, divided by 149.5, which is opposite your unknown variable. And thus you arrive at an answer of 45,000 rands. The exact same thing you do to calculate your profit. You multiply across and divide by the unknown, which is opposite, to give you 13,500 rand, to give you 13,500 rands. After adding your cost and profit, you would then get a value of 58,500 rands. In order to get your VAT component, you can easily take 67,275 subtracted by 58,500, or here again you can also use a ratio and fraction method to get your VAT amount of 8775. Now let's move on to something a little bit more challenging. On 31 December 2020, ABC Limited had equipment to the carrying amount of 25,000 rands on the statement of financial position, with a remaining useful life of 2 years and nil residual value. ABC depreciates equipment at 10% on cost using the straight line basis. You may assume a 31 December year end and that all equipment was acquired at the same date. There have been no purchases or sales of equipment. In terms of your requirements, calculate the value of depreciation on equipment for the period ended 31 December 2020. Determine the age of equipment as at 31 December 2022. And 3. Calculate the acquisition cost of equipment. At this stage, you may pause the video to try this out for yourself. Part number 1. How do we calculate the value of equipment as at 31 December 2021? So generally, to calculate the value of depreciation, one would take the cost and multiply it by your depreciation rate, and you would simply get the answer. But in this case over here, if you look more closely, we don't have the cost, we don't have the acquisition date. From the data, the question is telling us what our carrying amount is at a specific point in time. So the trick behind this is to use ratio and proportions. The way how to get your depreciation for 2021 is you would need to take your opening balance as at 1 Jan 2021, which in this case is exactly the same thing as a balance as at 31 December 2020, and one would divide it by the remaining useful life as at 1 Jan 2021. So this is fairly straightforward. 25,000 rands is your opening balance, and your remaining useful life as at 1 Jan 2021 is 2. You then get depreciation of 12,500. Now let's move on to part 2. Determine the age of equipment as at 31 December 2022. In order to calculate the age of equipment at a specific point in time, your starting point would be to calculate the total useful life. Your total useful life is equal to 1 over your straight line percentage of 10%. In this case of year, 1 over 0.10 will give you 10 years, so thus your total useful life is 10 years. Then, your age as at 31 December 2020 is equal to your total useful life of 10 minus your remaining useful life of 2 years, which means that your equipment is 8 years old as at 31 December 2020. From 31 December 2020 to 31 December 2022, there's a passage of 2 years. So 8 plus 2 gives you 10 years. So your age of equipment as at 31 December 2022 is 10 years old. Part 3. Calculate the acquisition cost of equipment. As you can see from the question, cost was not given, but using other variables, you would need to calculate your cost. A very useful formula to know is cost is equal to your carrying amount as at a specific point in time divided by your remaining useful life at a specific point in time multiplied by your total useful life. All of this data has already been calculated or provided already. So in this case over here, the question gives you your carrying amount and your remaining useful life as at 1 Jan 2021. And you multiply it by your total useful life of 10 that you got from part 2 to give you an acquisition cost of 125,000 rands. Also bear in mind that in the last sentence of the question, it did tell you that there has been no purchases or sales of equipment. And that basically illustrates that the only movement in your asset balance is due to depreciation. In this slide, you can see a proof or an amortization table. So this amortization table basically illustrates to you the data as a whole. As you can see, it has a column for the date, a column for the remaining useful life, and then you have a column for your age, your cost, your depreciation, and your carrying amount. As you can see, the question provided data as at 31 December 2020. It told us that our remaining useful life was 2 years, which meant that the age was 8 years, and required number 1 asked us to calculate the value of depreciation as at 31 December 2021. We calculated it to be 12,500. Requirement number 2 asked us to determine the age of equipment as at 31 December 2022, and we worked it out to be 10 years. Requirement number 3, calculate the acquisition cost of the equipment, which we calculated it to be 125,000 rands. Thus, all of our figures are in balance, and everything is in balance because our carrying amount as at 31 December 2022 is null, as you can see at the end of the table. I hope that you have found this video useful. Click like and subscribe for more. Thank you very much.